Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I am joined by a very well-known name in precious metal sector, the author of Morgan Report and the Silver Manifesto. I am pleased to have Mr. David Morgan in my show. David, welcome. It is great to have you.
Well, Lucian, it's great to be with you. It's the first time with you, and looking forward to it.
Yeah, me too. David, like you said, you are for the first time in my show, so please share us your background from scratch. Who is David Morgan?
All right. Well, since I'm 70 years old, that'd take a long time. But if you go to the website, themorganreport.com, and you go to the About tab, you'll read my biography. And there's also a film there called the Four Horsemen film that's freely available on the internet. And even though the film is probably around 10 years old, it's as pertinent today as it was when it was first released. And it really talks about the predicament the world finds itself in with the incessant printing of money. And what's interesting about the movie is this is a cyclical situation. It's happened before in humanity. The thing that worried me so much when I started my original website, the silver-investor.com, I rebranded the Morgan Report years ago, was this is the first time in world history where it's a global phenomenon. So as the dollar goes, so goes the rest of the world. We could argue the BRICS might be able to mitigate themselves, and they may be able to somewhat. Back to my biography, I got interested in the financial markets, almost obsessed as a young kid. I don't know why, I just did. I want to know what money is. I wondered, the only thing I knew was you had to save up enough money to be able to buy something, right? I was getting an allowance, and if I saved enough, I could buy my first thing. I saved and finally bought a transistor radio. Oh man, that was like the ultimate. I remember buying that, my first thing I ever bought for myself, and I was probably 10 years old, 11, something like that.
Yeah.
Anyway, so I thought about how do these skyscrapers get purchased? Who buys these huge farmlands? How does this work? So I just dove into it, started trading stocks when I was 16. Really wanted to be in the financial markets. My dad said, no way. He was so mad at his stockbroker. He lost money. He said, you're not going into finance. What are you going to do? I said, I don't know. So I read the World Book Encyclopedia. I've always been a reader, always been kind of intellectually curious. So I read it's called The Career Guide that went along with the encyclopedia set. And so I read the whole thing over the weekend, and I said, Dad, airline pilot. He goes, great. So I didn't think he'd say yes. I started flying when I was 16. So I'm trading stocks on one side and I'm flying on the other side. Graduated from Cal Poly, San Luis Obispo with an aeronautical engineering degree. And rather than going to the airlines, I got picked up on the military side and started flying as a crew member on the B-1 airplane, Rockwell International. And I got to fly on aircraft 1, 2, and 3, what we call the Cadillacs. They were the full bore original design. And then the Air Force canceled the program and it reignited. I left. I was actually picked up by the Skunk Works and I worked on the F-117. Left the aircraft industry and started working in the financial industry. And I've been there ever since. And then when the opportunity came with the web, I saw the opportunity to be totally independent and work in my dream. And my dream was to work in the financial newsletter industry. So I broke into that more or less as a hobby rather than a career. But I had a lot of early adapters that were reading what I was writing and said, geez, this guy seems to know what he's talking about. He's recommending silver at the inflation adjusted all-time low in 5,000 years. The guy knows how to pick a bottom. And none of the millionaires were buying. Only the billionaires were. It was George Soros, who I'm not fond of, but he had Apex Silver Mines, which is really a zinc mine. Bill Gates, I'm also not a fan of, but he bought a lot of Pan American silver. Yeah. And then the famous one was, of course, Warren Buffett himself, who poo-poos gold all the time, but yet he's a huge silver fan, and he bought almost 130 million ounces of silver off the COMEX. So the billionaires, the really, really smart money was into silver at the all-time low. And that's when I started the website, but I couldn't get a lot of traction. But I started in the speaking circuit and spoke around the world. and started telling the truth about silver and how undervalued it was, and had a pretty good 10-year run. I mean, we went from $5 an ounce to almost 50, and gold did the same thing, went from 250 to almost 2,000. And we were rock stars for a while. You couldn't go into an investment conference without people being very happy to see you. Last decade or more has been kind of the opposite. No one wants to hear about silver. They've heard the story. They're disgusted. They bought gold at the top or silver above 30 or whatever the case may be, and they're just sick of the story. But at least you're willing to hear it and ask me anything you like. Probably a very long introduction. I don't mean that.
No, great, David. Thanks a lot. And that said, is the silver one of the top 5 most hated commodities out there? And by that, I mean judging on the current sentiment in the stock market / silver equities. Is silver among top 5, top 3 hated commodities, would you say?
Yeah, I would. And it's the most undervalued. That's pretty easy to prove. Based on monetary history and valuations, taking anything on an inflation adjusted basis. I mean, silver hit 50 in 1980 on a 1-day basis. A lot of people don't bring that up. People that aren't familiar with the silver market as much as I am, 50, they think it traded there for weeks or months or whatever. No, it's a 1-day event. But what most people don't know is that its all-time high in January 1979 was 6. After it hit 50 for 1 day in 1980, the average price for that year was 20. So think about that. A year before, its highest ever was 6. And then a year later, its average price was triple that for the entire year. And I think that's what we're looking forward to. I think we're going to get a spike high. And it's hard to measure in fiat because fiat could be absolutely worthless, which means silver's price is infinity. I don't think the dollar's going to absolute zero, but it's going to get close enough and scare enough people that you might see $200 silver, $300. I don't know. But my point is this. It could spike. Let's pick a number. It spikes to X. And then it falls back to 1/3 of X. And it trades in that range for a long time. And that 1/3 X is $150, for example.
Yeah. I mean, at the moment, I don't know any other commodities, maybe a few, but silver seems like one of the best contrarian, maybe even better to say speculator play right now, right?
Yeah, and it is. And the thing about, real money is that unlike oil, which I like the energy sector, some of it. We have 2 uranium picks that we talked about. I won't give them over the air because my lists aren't very long, but I know you liked them both, or liked one of them anyway. The point is that you can't really hoard wheat or corn or cotton or any of the commodities, which are a way to mitigate inflation. But with the metals, you can. And even though silver is considered to be bulky, silver's bulky. It's bulky relative to gold and platinum. But I mean, I want to just make the point here. So here's a kilo of silver, all right? Here's my iPhone, okay? Now, if silver's so freaking bulky, that cell phone brand new costs about $2,000. So 30 times 30 is about 1,000. So this is worth roughly 1,000, roughly a half of a new iPhone.
Yeah.
Tell me anything that you own that's that small in volume that's worth $1,000, unless we're talking, rare stamps or rare coins or maybe fine art. There isn't anything. So is it really too bulky? I mean, that's 1,000 fiat in US terms. I could put, 10 of them and hold them, I mean, you're not talking a lot of volume. When they say it's bulky, when you start, stacking silver at the level of some people that have, deep pockets, and you're buying, a ton or two, yeah, it does take a lot of space. But the point being is there isn't much in the average person's life that is as dense as silver is. So on a volume basis, it's worth a lot. In fact, I did a quick study one time. You might get a kick out of this. And I know I'm kind of digressing all over the place, but it's fun to talk to you.
Okay.
How much is a Lamborghini worth? and how much would the Lamborghini be worth if it was all silver. In other words, if you cast the Lamborghini, it was 100% silver. Actually, the silver is worth more than the Lamborghini.
Good point, David. Excellent point. David, where are we now in the terms of silver supply and demand equation? Can you expand a little bit on that?
Yeah, I used to, this was kind of my main thrust back in the early days when I got started in the speaking circuit in, 1999, 2000. And we're in a deficit for about 15 years. We haven't been for the last 15 years. So we are not, we've been building inventory above ground since 2006. However, it's hard to calculate the deficit depending upon how you define deficit. If you define deficit as the amount of silver that is consumed and invested in versus mine supply and recycling, we've been in a deficit for some time. Yeah. If you define it only objectively, which means is the above ground supply increasing or decreasing, we have not been in a deficit. But basis the amount of investment and industrial use, we have been in a deficit, and that continues to grow. The Silver Institute just put out something I put out on my Twitter. I retweeted. I think that the deficit's projected to be 144 million ounces for this year, 2023. The previous year was, I think, in the 200 million range, which is the biggest one-year annual deficit we've ever had in silver since we started, keeping meticulous records. Yeah. So I also put out on my Twitter that silver is in what's called a natural corner. And just for credit, because I like to give credit, it's not my original thinking. Jim Dines, who's long deceased, but in fact, Jim was pretty instrumental in getting me into the newsletter industry. I liked what he did so much. I thought, man, I want to do that. Anyway, coming back on point, call it a natural corner. A natural corner, when you corner a market, you buy enough of the oil market or the silver market or the wheat market or the rapeseed market, known as canola oil, to push the price wherever you want because you own so much of it, you control the market. That's called cornering a market. I know you know that, but I'm doing it for our audience. Well, so what's a natural corner? A natural corner is when industry needs so much silver that they are going to eat up all the silver that's available and then some. Now you have naturally cornered the silver market because you are not in the Tesla business if you don't have silver. You're not in the SpaceX business if you don't have silver. You're not in the computer business if you don't have silver. You're not in the, whatever. I mean, there's so many businesses that require silver or they cannot function. They can't exist. And it's the essential metal. And there's no substitutions in most cases. So as industry continues to gobble up more and more silver, solar I didn't mention, which is one of the key ones, you're going to continue, if things continue the way they're going, and no one knows the future, that in theory, you will not be able to get enough silver out of the ground to keep all these industries alive. That's a natural corner. Now, if you add investment demand on top of that, what's going to happen? Well, a lot of people will be moving into silver because the dollar is dying or their currency is dying, or they want to preserve wealth, or they want to be able to put $1,000 in their pocket and leave town. Now you've got two competitors. You've got industry that has to have silver or they're out of business, competing with people that want money, and there's an infinite demand for money. So it's quite an intriguing story. I know I sound super bullish, and I still am. It's very disheartening because I know what I know the truth, but I can't control the market. And the people that do control the market right now are probably pretty darn scared because the price in silver is not nearly reflective of the conditions I just outlined.
Yeah, well said, and I tend to agree with you on that. David, can you explain to our audience? The term that the silver price is manipulated. What does it mean? Explain to a guy that entered yesterday in silver investing. Is the silver price manipulated? And if yes, pure and simple, why?
Why? Okay, yes, the price of silver is manipulated. We wrote a chapter in this book again. I'm out of books. So you can only get the PDF of the book.
Okay.
I only sold like 2,000 copies, which is fine. It's a niche market. I know that. So there's something called the Sharpe's ratio, SHARPE. And if you use that ratio, what you determine is if there's a random walk. In other words, if something is a free market or not. And if you do that analysis on the silver market, it comes out very close to Bernie Madoff, which was totally a fraud. Silver market is manipulated. There's no doubt about it. Why is it manipulated? There's lots of reasons exactly why. I'll just give you my take.
Yeah, your take, please.
Because the government, or the money masters, I'll call it, because the government really borrows money in existence. They borrow it from the Federal Reserve Bank for the most part. And so when they say, you know, this is common in the United States, you might hear it in Croatia or not, I don't know, that, oh, don't worry about the debt. We owe it to ourselves. No, that's a lie.
Exactly.
The United States debt is owed to the central bank called the Federal Reserve, which is mostly owned by Europeans. Yes, the member banks own part of it as well. But the idea is, no, we don't owe it to ourselves. We're on the hook for it, which means it's the ability of the United States government to tax their federal citizens to pay back the debt to the bank. So that's point number one. So the bankers don't want anyone escaping their web, their net. They want them to stay in the game, which means they don't want anyone to learn about what gold and silver do in a hyperinflation, a mild inflation, a deflation. They don't want people to escape. So you never really hear much about the silver and gold markets in the mainstream financial press, other than the price. And then occasionally they'll bring someone on. I've been on national television, I don't know, 5 or 6 times talking silver in a very bullish way, if they'll let me. I got cut off one time. Anyway, the point is that if people understood how the banking system works, there'd be a revolution before tomorrow morning. That's almost a direct quote from Henry Ford. I mean, the original Henry Ford, the started Ford. The banking system is based on a Ponzi scheme, and it's something that goes against everything that humanity stands for. Because the one thing that I've taught my kids, and if you have kids, you probably taught them the same thing, is you can't get something for nothing. And yet the whole system is built on getting something, anything, for nothing, because when you could create money out of nothing and then use it to buy commodities, houses, congressmen, whatever you want to buy, you've got a lot of power. And that's why I call money the money powers, because it's a power trip and they're able to purchase whatever they want, basically for making something that's a fraud. There's nothing of value in that piece of paper other than your belief in it. And once the belief is lost, the trust is lost, it doesn't have to be 51% of the people. It only has to be a few percent that start to move their money into gold or silver, or into oil, or into crypto, or into whatever, but out of the dollar, selling dollars to buy something else. And that's taking place as we speak. The bond market really has never had the kind of situation that we're in the most recent auction, where there really weren't that many bids out there for what the banks or the Fed was offering. And there's a couple reasons for that. But honestly, and I don't want to play the fear card, I'm not built that way. I really stay pretty optimistic because I'm pretty grounded, pretty centered individual. I had to be. If I let this stuff worry me, I wouldn't have made it this many years. But having said that, I am more concerned than I've been in a long time, because the end seems closer than ever, and I don't see the Fed having the power that they once did. All they can really do now is talk and say everything's okay. Don't look that direction. Don't look behind the curtain. Toto just pulled the curtain back, and there's the wizard, and he's pulling levers that do absolutely nothing other than try to make you believe everything's okay, and it's really not.
Yeah, got it. What category of silver companies are currently most undervalued? Is it the explorers, the developers, or the producers? What is your take on this?
Well, the producers, for the most part, are not making money. If you let me just back up for a second here. I'll pull something out on a recent study that was taken using all-in sustaining costs.
Yeah.
And First Majestic, Fortuna, Pan American, Fresnillo, Hecla. The weighted average of all those is about 22.50 per ounce out of the ground. And silver's right just barely above that price right now.
So they are losing money.
They're losing money. So the explorers are hard to determine because you don't know if they're going to make a discovery or not. So yeah, there's an explorer 2 or 3 maybe out there that are really undervalued because they're selling for, 25 cents and they're worth 250 because they're going to make a discovery. But we don't know that ahead of time. So I like to spread it out. I like to have the royalty companies, top tier cash rich companies. Then I like the junior producers that are actually producing silver, but they have exploration potential.
Mm-hmm.
That's kind of the sweet spot. And then what I call rank speculations. They got good people and they got enough in the treasury to keep drilling for a while. The problem is, as you know, and we talked offline just before we started, there's not much interest in this sector. So it's extremely hard to raise money to be able to go out and find that next discovery. And until silver gets to the point where even the majors can make a profit, the industry is really falling on harder times. And one more point that you're well aware of, and you can reiterate it, but there's never been as big a discrepancy between the silver miners and the price of silver. I mean, the silver miners are selling for less than they were selling when silver was under $18. And now we're at, 23 or whatever. Gold is at pretty close to the all-time high. Yeah. And gold miners are selling for what the gold, when gold was around 1650. So if you want leverage in the system and you believe that the world of silver isn't going to end, and believe me, if the silver miners ended, in other words, we never mine any more silver, the world would end. I mean, you cannot have the modern technological world without silver. Can't. You could go without gold. Gold is gold. I like gold. I'm considered a gold bug. I'm much more of a silver bug, but you can live without gold, but you couldn't live without silver.
Do you believe that silver will outperform gold, David?
I do. I base it on history and affordability. In the 1970s bull market that peaked in January of 1980, a lot of people saw gold take off. Gold was actually, I was in the futures market. I made a lot of money in gold as a youngster. It just, it didn't ruin me, but I thought it was easy. I didn't realize how hard it would be later on. But the December contract I bought was like 300 an ounce. And so the spot price, I forget, I won't lie, it was like 282 or something. So I bought the futures month for 300. And then in January, it peaked on my birthday. So how's that for, luck? January 21st, 1980 was my 27th birthday. And I was up more money than I was making at my job by a factor of several months, and cashed out part of it. And so I'm sorry, I lost the question. Can you bring me back?
Will silver outperform gold? Oh,
outperform. Yeah. So what happened was, as gold took off, people started looking at that and said, well, I can't afford gold, but I can sure afford silver. So that's what'll happen again, I think, as gold gets past, I don't know, pick a number, 2,500, 3,000, I don't know. It's holy moly. I can buy one gold coin for $3,000, or I can buy this bag of silver for $3,000. I'm going to buy silver. So I think that's part of it. And then the dynamics are so good on silver relative to gold because there's so much less of it on a cost basis that you will see it really outperform. I have very little doubt that it won't outperform unless there's something that I'll state that the powers that be, the money powers, are able to convert us to their new system and just push the metals, out of everybody's consciousness, which I doubt will happen. But it's, I can't rule it out. I mean, do they have that much power to convert everybody to the central bank digital currency and force everybody on their slave system where you have a cashless society and a universal basic income. Certainly that's what they're proposing, but I don't think it's going to happen or not happen very easily.
Yeah. So you love physical silver. What is it better, coins or bars? What do you prefer?
Yeah. Yeah, I've always proposed that we have physical silver first, then you get into the shares. And the shares you go, rock solid company, blue chips, and then speculations is the money you can afford to lose. I teach and have for years that when you start, you should have coins. And the reason being is that if there is an all-out financial collapse, no one wants to be a prophet of doom. But in the unlikely scenario that that does happen, then you'll be able to barter with those coins. But if you have a bar, you've got to be very careful, because let's say an average saver, and there aren't too many of them anymore the way the economy is going, but they could buy 100 ounces of silver. So if you had a 100-ounce bar, you're looking at $2,700 retail. It's going to be $23 plus a premium of $3, $2, whatever it is. We'll call it $2,500. But if you have 100 coins, you have 100 opportunities to sell your silver. So you don't have to worry about making the top price or whatever. Whereas with the bars, but once you've accomplished that and you have your coins enough suitable for you or your family and friends, or however your heart is set up, then you move to bars because they're just easier to count, to stack, to trade, lower premium. They're much easier to deal with, but you really need to start with coins. I'm very much an advocate of that. And again, it goes from one to the other. Some people want just coins. Some people want just bars. I advocate coins first, bars second.
Mm-hmm. And which coins do you prefer? Which mint?
I prefer, for Americans, and you can also get American coinage in foreign countries, but it's more difficult, what we call junk silver to trade. It's basically, we were not really on the silver standard, but quasi up until 1965. So the coinage that was circulating in the United States up until the time I was 11 years old was 90% silver coins. And so you can still buy dimes, quarters, or halves in what they call bags. In fact, I'll scooch back another second here and pull out. So that's $100 in dimes right there. And cost of that's about 25 times. So that used to be $100 and now it's $2,500. What changed? The dimes in my hand didn't change. What changed is the paper currency's value relative to this bag of silver. So that's what I teach, is junk silver first, if you can. And then if you can't, you can go to what's silver rounds. There's silver rounds are coins. You can't call them coins because in the real world, coins are minted by governments. So coins minted by private mints are called silver rounds, and they have them in 1 ounce denominations. They have them in half-ounce denominations. Some do it in 10th ounce denominations. In fact, I used a mint master friend of mine that minted up a bunch of 1/10 ounce silver rounds for me, and I used to give them out at the conferences just as a, kind of as a business card thank you kind of a thing. In fact, I've got one of those also. That's what a 10th ounce looks like. So
Nice.
that's $2.50. So that used to be a dime, and now it's worth $2.50.
Nice, Dave. Nice. What about interest rates? Are we done with the rising interest rates? What do you think?
Well, that's a tough one. I don't think we're done yet, but there's a lot of arguments that we are. If you look what the bond market's doing, it is signaling that we're done. The bond market, the bond traders, in my vast experience, and I've always considered this, are the smartest guys. I mean, that's the most money. I mean, the bond market's 5 or 6 times bigger than the equity market. And the equity markets represent all the, going concern businesses that exist. Not all companies are public companies. Some are private, and Anyway, the point is that it's a much bigger market. So you got to have better information or whatever. So I think they're wrong. I think we are going to get another lift in interest rates, but not much longer. It's hard to say. I think the Fed knows if they throw in the towel and start lowering interest rates, that the smart money knows the game's over. Because what it really signals is they're going to print into oblivion. And when they print into infinity, that means that the dollar loses any value. And so in theory, it goes to zero. It won't go to zero, but it will lose more purchasing power more rapidly. And that's the point. I want to make another point that I did recently on an interview, but it just bears repeating. If you had $1 million in 1913 when the Fed was founded and you kept it in currency, it'd be $1 million today. But if you took that $1 million and got it in coin in $20 gold pieces, it'd be worth $100 million today.
Yeah, and David, if you said you think that dollar will lose its value, and I tend to agree that it is losing the value and it will continue to lose. But in that scenario, do you see a market meltdown?
I do. And a meltdown could be a skyrocketing stock market. Wait a minute, David, what are you talking about? I'm talking about a Zimbabwe type of situation. I don't think the dollar will ever do what Zimbabwe did, but in Venezuela. So at the end of these great inflations in countries like that, and it could happen in the United States, people put their money anywhere and everywhere that they possibly can, except in the currency. So people that have any savings at all will buy an extra jar of peanut butter, or people with some savings will move into the stock market. So the stock market will go higher and higher and higher. And they think that they're mitigating the problem, but they're not solving it. Because if you do the studies that I've done and many others have done, you'll find that in the Weimar Republic, the stock market helped, but it didn't cover inflation. The only thing that covered inflation in the Weimar Republic was gold and silver. And that's the same in Venezuela or Zimbabwe. So we could get a melt up and people think, oh my goodness, look, stock market, I'm in the stock market, it's going up. Oh, thank goodness, I've saved, my wealth. I've protected my wealth. And they have mitigated the problem, but they haven't solved it. And but I think the more likely scenario is a crash in the stock market. I mean, I'm really hoping for the most morally correct mitigation of the problem. And that means that the currency does still exist. It still is trusted, and that we reprice everything according to free market conditions, where a business or a house or an automobile or gold or wheat or whatever is priced on a new paradigm, that all this derivatives that's worthless is marked to market, comes worth zero. And in other words, it'd be a huge contraction in the money supply. And then hopefully we could put it back to specie, back to gold and silver, which I doubt will happen, but it might be tied to gold and silver. But I doubt that. I think the chances of that are less than 1%. I think the more likely scenario is just keep printing until no one trusts the currency. And the Fed knows this. Bank of International Settlements knows this. Jamie Dimon knows this. So what they're proposing and they're implementing and have already done in China to great success is to put everybody in a new system. So the idea is to get everybody in a new system, to reset the system, wipe out the debt, mitigate it one way or another, and then say, okay, you're turning in your old currency for the new digital dollar. You can't have cash anymore. If you do have cash, you've got 30 days. If it's over $10,000, you better have a good reason why you have that much cash. Otherwise, you're going to be put in prison for tax evasion, or who knows what they'll come up with. But these people are megalomaniacs. I mean, these are power mongers that have nothing but control as their game. They have more money than they know what to do with, but they want control, and they want control over you and I, and they want to have everything for themselves and nothing for us. I mean, Klaus Schwab wasn't joking when he says you'll own nothing and be happy. We may end up owing nothing, but I don't think that's going to make very many of us happy.
David, where do you see cryptocurrency in that scenario?
I think it'll mitigate the problem in some cases. I do think that Bitcoin's got such a following. I think it will probably do well. Ethereum is probably the same case. I do think that as things progress, though, that the ABDCs will do the best. Maybe not as good as Bitcoin because it started as the first and so early, and you can mine it for free in the very beginning. But the asset-backed digital currencies, so if it's backed by cobalt or oil or gold or silver, which some are, and more will come into that, because really the best way to trade gold and silver, even in the old days, was with a receipt. I mean, that's how the goldsmiths got away with cheating, is they gave out a warehouse receipt and said you own 10 ounces of gold, and you had that made up into 100 pieces of paper, and then you went into the marketplace, and rather than trade gold with the tailor, you gave me a receipt. So people got used to using a receipt instead of the actual specie. Well, that's the same thing now with the phone. I mean, you could digitize gold, and you could, I could pay you for some advertising for the Morgan Report, and I could just click a button, and now I've debited my silver account and put it into yours to the gram or to the 0.001 gram. And so that's the only way to really divide, gold coin or whatever, very easily, very swiftly, very conveniently, because people do like the system at hand, especially the younger generation, which just wafting their phone over their Starbucks, payment, or the grocery store, or the toll booth, or you name it. My kids hardly ever carry cash. I do. I'm old school, and I usually ask for a cash discount, but very few people. But that is one way to put real money back into the system and make it convenient for everybody.
Yeah. Final question, David. 12-month horizon. Name 3 commodities besides silver and gold that you are bullish on, and name 3 commodities that you are the most bearish on.
All right, 3 commodities I'm most bullish on.
Yeah.
The oil. It would be one of the foodstuffs. I'll just go with wheat, and far outliner for a commodity. I think I would go with coffee. Coffee is pretty addictive, and
Yeah.
people will pay almost anything to get it. So I would go with those 3. And the other one was 3 that what?
That you are bearish on. The
Yeah,
most
bearish.
Yeah.
Commodities?
Yes.
Oh boy. Okay, that's tough. Bearish on commodities. Well, there is the futures market for the treasury, so I'll use that as one if you allow me. So U.S. Treasuries market, bearish. I would say, well, most commodities are needed, so it's hard to say. I don't want to waste your time.
No
I'll just
problem,
go
David.
cotton.
No.
I'll go cotton, U.S. Treasuries, and an outlier there would be
Let's call it US dollar, and that's it.
all right, we'll do that. That's a certainty. Okay, thank you.
No problem, David. Thank you very much for this interview. It was a great chat, and I hope we will catch up sometime soon again, maybe in better circumstances for silver, definitely.
Oh, great. Well, thanks for having me. I really enjoyed it. Great questions.